Last week was full of surprises and all-time highs. The crypto market is booming, baby. Despite everything, can fewer people doubt its success? Do you want to know the interesting events that happened this week in the cryptocurrency market and what to expect in the future? Then sit back, grab a coffee, and enjoy watching this video. Hey guys, my name's Shad and you're watching the EXMO channel. Before we dive in, don't forget to hit the subscribe button and click on the notification bell below to learn more about crypto in fun and effective ways. Now, last time we spoke about how cryptocurrency records at 21 were getting broken and how experts expressed their love to the BTC rush, but Bitcoin betrayed their feelings on Monday. Let's take a look at how it happened. The last week was marked by another price record for the main cryptocurrency, Bitcoin. On Friday, January 8th, Bitcoin managed to come close to the 4,200 point, $42,000. The weekly growth of Bitcoin reached 15%. Not bad, pretty outstanding. It took Bitcoin less than a month to double its value from 20K to 40K. Together with the BTC rush, new historical record indicators were achieved in the cryptocurrency industry. So, for the first time in history, the capitalization of the entire crypto market exceeded the $1 trillion mark, the big T, baby. According to CoinMarketCap, this also happened on Friday, January 8th, as well as on Sunday, January 10th. We're hitting it, we're hitting it. The market reached a capitalization size of more than $1.1 trillion. In comparison to the total market cap, the crypto market managed to become bigger than Facebook at $765 billion and Tesla at $834 billion. The main driver of the growth, of course, being Bitcoin and the entire cryptocurrency market last week, was the political events in the United States. Yes, politics matters. The protests of Donald Trump supporters in Washington, specifically the Capitol, escalated into the seizure of the Capitol building. In this case, Bitcoin once again demonstrated its qualities as a protective asset, which were noted by experts from the largest investment bank, JP Morgan. Now we listen to those guys, apparently. The Bitcoin's price rally was accompanied by an increase in the number of Bitcoin addresses with a balance of more than 1,000 Bitcoin is growing. According to Glassnode, in the context of monthly data, this figure also reached all new time highs, around 2,334 wallets, which indicates that large Bitcoin holders are in no hurry to lock in those profits. It's just hodling. Bitcoin miners also showed a new historical maximum last week. After the last recalculation, the mining difficulty increased by 10.8% to 20.61 trillion hashes. If you look at the Bitcoin USD chart, you'll see that on Monday, on the 11th of January, the price of the asset decreased by more than 15%, only since that Sunday. However, the price met support at 32,500, after which BTC showed signs of recovery. As a priority scenario, we can expect a further recovery of the Bitcoin price to the previously reached historical highs. We can expect that. But if the price continues to decline, then the probable levels of support that we're going to test will be around the 30K mark, the 28K mark. So have a look out for those levels. Well, Bitcoin may return back to 30K. Ooh, who would have thought it? Let's take a look if ETH showed any similar financial fluctuations in the previous week. The past week was also very successful for the main altcoin. I don't even want to call it an altcoin, Ethereum. Ethereum prices rose by more than 41%, reaching a maximum of 1348. However, the asset still hasn't renewed the all-time glory highs of January 2018 when it hit 420, baby. The reason for such explosive growth in Ethereum was the interest from institutional investors, in particular the Grayscale Ethereum Trust. It garnered a lot of news. Since Ethereum has not yet renewed its historical maximum, the asset remains potential for growth. The demand for Ethereum is on the rise from decentralized financial investors. According to DeFi Pulse, the total amount of assets now locked in on DeFi platforms had reached a new historical record at $22 billion. It's just growing. Ethereum's price on Monday also showed a sharp decline of more than 20%, like Bitcoin. However, facing with the demand deferred levels around $1,000, it continued to recover. The asset price can also rapidly recover to levels of around $1,300 to $1,350 during this current week, and we're going to be looking out to see what happens. So what about Ripple? Last time we checked, it experienced significant problems with the SEC. Sorry guys. Ripple seems to stay in a pretty desperate situation and they've been there for a long time. While the overall market is booming, Ripple still fails to overcome the resistance zone at around 0.385 on the dollar. Investors were not optimistic by a tweet from the Ripple CEO Brad Garlinghouse, who expressed his disappointment at the lack of a compromise with the SEC and the lack of positive results. Based on the chart of the asset, we can expect movement in the range of 0.26 to 0.368 on the dollar. The main drivers of the cryptocurrency market will continue to be the external news. the news in the background regarding the political situation in the US, as well as news about the spread of COVID-19 across the globe. Tether. Tether printed $2 billion backed tokens last week. The biggest stablecoin on the market hit a new record, and now over 25 billion USDT circulates across Ethereum, Tron, and the Bitcoin Omni layer. There might be various reasons for Tether to print more money. Some people in developing countries simply can't put their trust into local currencies or banks, too much inflation or just no trust, and they don't have access to the USD. That's why they choose a stable digital asset just to save their money. Another reason for the growth may be the drastic sellout of Bitcoin into USDT on Monday. And finally, the third reason might be the situation in the US, when Trump supporters seized the Capitol. Notably, trading volumes for markets quoted in USDT continue to surpass Bitcoin quoted pairs. At the same time, Tether supply growth got the attention of the New York State AG. Not a good thing. The prior court statement goes a little bit like this. Tether reserves include cash, short-term reserves, and other crypto, but there has not been any legal document that can support this claim since 2018. They can't prove the money's there. In April 2019, Tether's supply was only 74% backed by fiat, or at least they say so. While in November 2019, Paolo Odroino, CTO at Tether, stated in his Twitter that Tether is fully backed. Full stop. We will continue to monitor the situation around Tether for you. And now let's move to China. Chinese sports lottery firm 500.com announced on Monday that it's going to purchase Bitcoin mining machines. They're getting into the game. 500.com expects to issue $14.4 million worth of its Class A ordinary shares to obtain these mining machines. The company is ready to issue around 12 million of these shares and expects the price of around a $1.20 share. They're fundraising a big mining operation. If the deal goes according to 500.com's plan, then the company will acquire brand new mining machines, think S9s, M20s. The total hash power should be around 918.5 petahertz per second, that's petahertz with a P. 500.com expects to install these machines and start mining Bitcoin during the first quarter of 2021. In the UK, the FCA is warning citizens about high risk of buying crypto assets. Whoa! The FCA warns investors that they should be prepared to lose all of their money if they choose to invest into cryptocurrency. Well, that's news to me. If they offer high returns especially. The FCA started a new promo campaign on Monday with warnings to regular customers that cryptocurrency investments have significant price volatility, and it can be very hard to value crypto assets reliably. Well, obviously. Moreover, crypto asset consumers are unlikely to have access to the Financial Ombudsman Service of the Financial Services Compensation Scheme. That means you're not going to be able to get your money back if you get scammed. By the way, the FCA's ban on the sale of derivatives and exchange-traded notes passed in October, if you might remember that far back, went into effect just now on the 6th of January. To sum up, the UK's FCA is afraid of possible investment losses and warns investors that if they want to invest in crypto, they can do that. But they shouldn't expect any compensation should things go wrong. The FCA simply won't compensate these losses. Makes sense. And back to China. According to a report from Shenzhen Daily Sunday, the Agricultural Bank of China has enabled a number of ATMs in Shenzhen to offer trial services of their brand spanking new digital yuan. Shenzhen citizens can deposit and withdraw digital yuan to and from accounts. Moreover, the Agricultural Bank of China is about to establish an office in Shenzhen that will be dedicated to innovations around the digital currency yuan. Other major banks also work on the apps related to the People's Bank's digital currency initiative. China looks very well poised to be closing in on complete digitalization of money and seems to be the first nation actually taking this seriously and the first one to fully adopt virtual money as the national currency. The recent euphoria of cryptocurrencies finished with the severe sell-off on Monday as Bitcoin prices dipped by 12%, which would be the most for a single day since March. The decline of Bitcoin from $42,000 to nearly $30K. The declines were broad-based across all digital assets as we saw. Scott Monard, chief investment officer of the Wall Street firm Guggenheim, tweeted that Bitcoin's parabolic rise is simply unsustainable in the near term, vulnerable to setback. The target technical upside of $35K has been exceeded. Time to take some money off the table. It seems that somebody loses faith in crypto. Note that Scott Monard once shocked Bloomberg TV hosts with his prediction of Bitcoin's price hitting $400,000. Last but not least, the Russians. The new Russian banking regulation allows financial institutions to freeze bank accounts with crypto assets. The rules have been imposed by the nation's central bank. Fun stuff. The authorities of the central bank insist that large amounts of crypto transactions can be determined as suspicious transactions, involved with terrorism, money laundering, et al. Fun fact is that a new law that states crypto as a means of payment came into force in the past week in Russia. Russians' soul is interesting. With one hand, they accept crypto, while with the other, they ask banks to indiscriminately freeze crypto accounts. Kinda curious how it's going to play out. And what a week! Bitcoin keeps everyone on edge, and a lot of people lost hope on Monday and sold their crypto assets. China seems somehow to be the first nation to widely adopt crypto, and Russians can't even decide whether they like crypto or not. And in addition to that, the UK FCA is concerned about the rise of crypto investors and adoption. In other words, just a regular chaotic week on the market. So what do you think? Will the price of crypto go up? And should you hodl, or is the market slowly hitting the recession and should you sell? Leave your answer on what you're going to do in the comment section below. That's it for now, but don't worry, we'll see you very soon. A new crypto review awaits you next week. Subscribe to our channel and be the first to be updated with all the latest news from the crypto world.